Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Tom Canfield. Remember, new shows are posted every Monday and Thursday. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Today, I had the great pleasure of speaking with my friend Tom Canfield. Tom is a full-time trader who, like most of us, had a very bumpy road at the beginning of his career. So he shares with us some of his struggles on his way to becoming a full-time trader. We discussed how trading is personal and what helped Tom find a strategy that fit his personality. We chatted about the downtime in trading. When there's nothing to do in the market, what does Tom do during those times? We said that trading is personal, so Tom shares with us how he manages himself and what he does following big losses. Finally, we talked about the activities that Tom does outside of trading that help him while he's trading, trading psychology, and his thoughts about traders on Twitter. Without further ado, let me take you right to that interview with Tom. Tom, thanks for joining me.
Thanks, Anthony. Appreciate you having me. I've never done anything like this before, so I'm not sure what I'm signing up for.
Well, Tom, I'm really glad you're here. You and I have had a lot of conversations on the golf course, on Twitter, and there's a lot of fun things we're going to talk about today. So the thing I want to begin with is you, like myself, and actually many other traders out there, had a very bumpy road in learning how to make money in trading.
Yes.
So talk to us a little bit about what you went through to get yourself in position to be able to be a full-time trader.
I was sort of forced into being a full-time trader because originally, after I graduated from business school, I got into trading on the institutional side with Kidder Peabody. After a couple of years of that, I loved the business, but I couldn't stand the people. And so I decided to start a restaurant, totally out of my bailiwick. But I figured, what the hell? And after about 6 or 7 years of doing that and having young kids, it was too exhausting. And I needed something a little bit more stable. My dad took me to a Wade Cook seminar, which some of you may remember his name. He was the covered call strategy selling guru at the time, and it was just more of a father-son fun trip. And so we went out to Salt Lake City for a 2-day seminar, and I was totally fascinated by it. And within about 6 months of messing around with it while I was still running my restaurants were called Bagels and Java, and running the bagel shops, I was, buying these volatile stocks and selling these high-priced options 30, 45 days out, getting, 5-8%, some of them even 10%. And I thought, God, this is so easy. And then all of a sudden, something happened, and I had two, I think they were like biotech stocks or something, and they literally got cut in half. And I realized, so that's why the option premiums are so high. And that was my early education, but and I didn't do very well at it, but I got hooked on it. Like it it really intrigued me. And so the restaurants had kind of run their course. I was really good at running one restaurant. I was atrocious at running 4 because the management was too much for me. And so as that business kind of started to implode, I started spending more time looking into trading, because that was the time when the internet started to come around. It was 1994, 95. And so all the stuff that I used to do institutionally started to become accessible online. And I'm like, hey, this is a way I can maybe jump in and do this business without dealing with the people. And so that was really the genesis of what got me into it. And I started in futures, which is right up your alley, and opened a little $5,000 account and got all set up and whatever, and read a book or two, and I don't even know. And I literally was just flying by the seat of my pants. And I think I lost all $5,000 in a matter of about 3 weeks. And so I said, all right, took a breather, set up another account, learned some lessons, set up a $10,000 account, and actually started to do okay, and was just sort of chipping away, and I'd make a couple $100 a day, $200 a day, $200, and I'd be really consistent. And then I'd have this day where I'd lose half the account. I'd go 200, 200, 200, 200, 200, lose $4,000. That pattern existed with me for probably 2 years. Now, let me back up a little bit. During all of this, the bagel shops kind of slowly but surely started to fold. And I'm like, okay, I'm not really ready to try and do this full time because I'm not really making any money at it. But I don't have a job anymore because my business is failing. So I can either go out and get another job, which I have absolutely no interest in doing, or I can find a way to make this thing work. And so I took the leap because I had to take the leap, not because I was ready to take the leap. I've looked back on that several times, and for me, it was the best thing that ever happened because it forced me to get my head out of my ass, and it forced me to take a hard look at myself and figure out why I was doing the things that I was doing. So I migrated away from futures. I moved myself more into stocks. It was probably 99. It was early, mid 99 when all of this was going on. So I was able to kind of get in the way of a little bit of positive action, since most of you probably know what 1999 and then 2000 was like. But I didn't have a whole lot of money. But I'm trading these stocks and whatever, and I think I'm way smarter than I am. And I don't really have much of a strategy still. And then, March of 2000 rolled around, and whatever I had built up, I blew up again completely. And I think it was, I don't know, I had about $40,000 that I'd built up, and it turned into 5, like in a matter of about 4 months. So I had to go grovel at the feet of my father, which was about the last thing I wanted to do because nobody was a big fan of me becoming a trader independently as opposed to a respectable, steady job, especially when I had 3 kids, at the time in diapers and all of that. It was sort of idiotic and crazy. But thankfully, my father's an entrepreneur too, and he gets it. And he loaned me a chunk of money. And it was at that point, because I was working off of borrowed money from my dad and a gun to my head because I had to do it, that I sort of slowly but surely started to figure some things out.
Well, let's go from there. So just looking back at your story, you had to borrow money. You blew up some accounts.
Yep.
You were forced to make this work. You had a family. You didn't really have a strategy. It's a lot of obstacles, Tom, to overcome. So what I want to talk about next is, something you and I, we know each other pretty well, and we agree that a trader's process is very intimate and personal.
Yes.
So let's talk about you and your development of your process and your strategy. How did you go about doing that at that point?
Well, it's a funny story, actually. I'm in some chat room where I'm trading the Qs, and this is you'll have to forgive all of my time frames because I'm not real good at remembering the exact timing. But it was during that 2001, 2002, as the market kept going and looking and trying to search for a bottom time period. And there was a guy in the room that some of you on Twitter may know by the name of Pat Walker. And it turns out, because he and I started to chat together, that he lives all of 15 minutes away from me in St. Louis, Missouri. And he'd been a long-time Can Slim, Bill O'Neill follower, trader, and had been very successful. But he was in there looking for alternative ways to generate a little extra income while the market just wasn't suitable to that style. But he and I started talking, and he started explaining to me what he did. And it was like the whole sky opened up for me, because it after everything I'd been through, it was exactly what I needed to hear at the exact right time. And it just sort of, took the scales off of my eyes, the whole concept of buying breakouts. And so I spent a couple of years fairly intimately with him, and he was my mentor, and he kind of taught me that style. And so to this day, the process that I built through learning from him and with him is what I use today. How much of that information do you want?
Well, we'll get into more details, but one thing I want to talk about is, how long do you think a trader has to set an amount of time before they can find a strategy and a process that works for them?
Maybe the time frame has sped up a little bit because there's so much more information out there than there was when I started. But for me, it was a full immersed 3-year process. And so if I had to answer, I'd say somewhere between 2 and 5 years. It doesn't happen overnight. It doesn't happen in 6 months. It just can't, because you don't know yourself well enough in terms of how you relate to the market, and you haven't seen enough, and you haven't experienced enough to understand what happens to you for you to be able to really start building a strategy that makes sense to you, that fits who you are. So, if I had to guess, some people can do it faster. It took me 3 years, and before I really felt like, yeah, I got it, it was 5 years.
Yeah, I agree with that. From my personal experience, it was right around 3 years for me too. So, everybody out there listening to this, here's two guys who've been through the ringer, and we're telling you, 2 to 5 years to me is right in that time horizon where I think you start to find yourself. So Tom, let's talk a little bit more in detail about your strategy. I know you already mentioned it's a breakout strategy. It was introduced to you by Pat Walker, but can you tell us a little bit more about the strategy itself? And also if you're using any specific indicators, and ultimately you learned this from someone else. We said trading's personal. How did you know that this was going to be the strategy for you?
So everything that I had experienced about price, I still felt like I was groping, until the concept of good companies, good growth companies that are breaking out on high volume to new high prices are where you want to be. And at first, when he was explaining it to me, I'm like, that doesn't make sense. But as I dug into the charts and I studied price action, it became painfully clear to me that was the way I wanted to go. One of the main reasons was because I always had an incredibly clear definition of where I was right and where I was wrong. Whereas everything else that I was doing before that, I never knew where I was wrong. I was just kind of guessing and just sort of, it was pain tolerance. It was like, okay, I can't take it anymore. And so it just felt like constant guesswork. Whereas when you're buying breakouts, when the price goes above and takes out a consolidation area and you've got increased volume, you're in. And if it falls back into the base, you're out. It's just that simple. And so for me, it allowed me to feel a sense of containment and control. And then as time went along, the logic of why these companies are being bought, who's buying them, the nature of the way institutions buy stocks and whatever just kind of falls into why trends look the way that they look. And so as time went along, I just got more refined and more refined with that. I use MarketSmith, which is a software product that is created by Investors Business Daily, which is basically that's the newspaper that's built on Bill O'Neill's trading style. And so in there you can build scans. And so I have over the years built 4 or 5 scans that I use. And my process is simple. I do it weekly. I don't do it daily. I don't do it hourly. I do it weekly. Sunday night, I sit down. I go through my 5 scans. It pulls out all the stocks that I'm interested in, and then I go through that list, which usually is somewhere between 80 and 130 stocks. And I throw out the ones where the charts just kind of look like crap. And that boils it down to about, I don't know, anywhere from 40 to 65 names. And I committed a long time ago to the fact that there's my universe for the week. I'm not going to deviate. I'm not going to go chasing what somebody else is doing. I'm not going to look for other things. If I can't figure out how to make a living out of those stocks, then I need to get better scans as opposed to something else. And so that helped me tremendously because it allowed me to just narrow my focus incredibly. It's one of the, well, I don't want to get into that right now. So that's what I do. And I do it at night. I don't do my prep in the morning. I do everything at night because in the morning I want to already have an idea of kind of what I'm looking for and what I'm after for that day.
So one thing that a lot of people ask me about is, Anthony, when you finally found the strategy that you felt was the right one for you, when it started to lose, because we all go through these times where the strategy all of a sudden is just not working and then you question it. What gave you the confidence to stick with it? And what did you do during that time?
Well, for the nature of the way that I built it, one of the things that I learned through studying from O'Neill is the market is either in a mode of accumulation or it's in a mode of distribution. And so if you're in a mode of distribution, nothing works. So you're out. You're silent. I took a lot of hard lessons before I was able to really start to figure it out as you're going, because you're like, I'll have these huge account surges and then I'll have these huge drawbacks and then these huge account surges and then these huge drawbacks. And it's like, okay, so clearly this doesn't work all the time. It only works in certain environments and it only works under certain conditions. Okay. So as you start to identify when those times are, what they feel like, and that takes time. It takes not just days, not months. It takes years of seeing cycles and the way things move and whatnot. And so the challenge started to become, okay, so then there's these lull periods where you can go 6 weeks, 12 weeks, even in an uptrending market where the market gives you basically nothing. And you've got to be content with doing nothing or doing as little as you possibly can, which is hard as a trader because you're like, every day you wake up and you're like, my job is to go sit down and take trades and make money. And when there's nothing to do, it's really easy to start deviating because you feel like you got to get something done. So the challenge is in sitting on your hands when things are not conducive to what your strategy is.
What are you doing when you're sitting on your hands?
I go play golf, which we can talk a lot about. I do a lot of reading. I love reading fiction. I have this fantasy of wanting to someday write a novel. So I spend a lot of time reading. I go run. I'll go run in the middle of the day.
So the bottom line is that you remove yourself from the screens because you know that this is a time that is just not good for you to be trading.
Completely. There's 2 times that I remove myself fully from the screens. When things are really, really good, I remove myself from the screens. When things are really bad, I remove myself from the screens. In the in-between times, I'm sort of monitoring and watching. Because if things are really good, I make more money on the golf course than I do standing in front of the screens. Because if I'm in front of the screens, I'm going to take stuff off the table that needs to stay in trades. So I'm much better off putting in a stop and just getting the hell away from my screens.
So something that I talk about a lot on Twitter and on this show is, and I'm not going to put words in your mouth, but I think that the edge that you have in your strategy that you developed over the years is execution.
Yes.
And you've refined that by seeing things happen and identifying when this is the time for you to take advantage of the market, because mentally you're in a good place, your strategy is working, and you remove yourself during those other times. And that to you is what you look at on a day-to-day basis, is that, like you said earlier, the strategy is not going to work all the time. None of them do.
No.
But by working on my execution and refining it, that's what has really helped you.
Yes. And you bring up a good point, because not only does the market have to be in a good place, but you have to be in a good place. And, you know, I don't know about you, but as you get older and you start taking on the responsibilities of family and, you know, I got 4 kids, and there's all kinds of different things that can get in the way of you being in a good place. Not, you know, forget about what's happening in the market. Are you in a place where you can take advantage of it? Are there destruction? Are there disruptions, distractions? You know, what's going on? You know, stress and trauma outside of trading plays a huge role in your ability to be effective inside the boundaries of the market on a day-to-day basis.
Well, let's talk about that more, Tom. I mean, the human component is real. We've talked about this a lot on Twitter, you and I. It's an emotional pursuit filled with failure. So talk to us about how you manage yourself.
Oh, that's like a whole nother interview. But I am a very emotional person. I am a competitive person. I am, you know, I'm volatile. I'm irrational. I'm expanding and being a little hyperbolic about it all. But I mean, I am not your average stoic, non-emotional, objective individual when it comes to trading or anything else I do in life. I'm intense. I'm passionate, you know, and that has its advantages, but it also has its disadvantages. And so you have to learn how to manage it. You know, there's so many different, you know, they say, well, don't be emotional. You know, trade without emotion. Well, that's bullshit. It's not realistic. Every single trade I get into, I want it to work. I don't get in and say, well, this is one of my 1,000 trades and maybe it works and maybe it doesn't, and the probabilities say this and whatever, and you just keep taking the trades. I don't think like that. I expect every single trade I get into to work. Otherwise, I wouldn't get into the trade. So I do trade with bias. I do trade with emotion. I am disappointed or upset when trades don't work out, especially when I really think they're set up to work out. So how do I manage myself? That's a great question. I have certain personal strategies. I don't recommend them to everybody because everybody's different. But like, I don't day trade because I'm not very good at day trading. Why? Because I'm too emotional. Swing trading works for me because it is much more objective. And so it removes me from the equation as best as possible. However, do I want to be able to day trade? Do I think that's kind of cool and sexy? Yes, I do. So I've gotten myself in trouble a lot in the past by trying to day trade while I'm swing trading. So here's what I've done, because sometimes I just have this uncontrollable itch. I've set a separate account up that I call a day trade account, my active account, if you will. It's a small account. I do not put very much money in there. And I don't expect to make any money. It's just sort of where I have enough self-control to go to this account to do my dysfunctional trading, as I call it. And sometimes I do really well, and sometimes I don't, and I end up about breaking even, make a little or lose a little for the year in that account. It's literally like 5% the size of my main account. But it's how I manage that aspect of me that just sometimes has to get out. And so it's not recommended, but that's what I do. And over the course of years, it has made me a lot more money than lost me, simply because it keeps me from doing something really stupid in my big account, if that makes sense.
No, it does. I mean, you're choosing an outlet to expend some of that energy.
Yes. If I have to do it. Now, as time's gone along, I've gotten much better at controlling that function for the most part, but it's still there. It's always there. So that's how I manage it for myself.
Something I want to talk about with you is managing yourself after big losses. We've all had big losses, and something that I think a lot of traders, new traders especially, after they have a big loss, they really don't know how to approach the next steps. What have you done following a big loss?
Now or in the past?
Well, how about you do both and show us how you've grown, right? Show us how you've grown as a trader and how you handled it then versus now. I think that'd be interesting to hear.
Well, in the past, I used to be one of the finest revenge traders you've ever seen. Anything that anybody has ever done in the name of bad trading, I have done. But I used to compound losses with greater losses because I would revenge trade, but I wasn't revenge trading on a given stock or whatever. Most of my big losses would come from me deviating from my strategy. This goes back to me jumping in and thinking I can be a genius day trader all of a sudden. And then all of a sudden I'm in a loss position in a trade that is outside my core strategy. And for whatever reason, my brain will not allow me to take a loss in a strategy that I don't know anything about. Like, I've got no business doing this, so I have to clean this back up and get back to break even so that I can move back on to doing what I normally do and right the ship, which is such a dysfunctional way to think. But it took me a long time to figure out that this is what I was doing. So that's what would happen. And I would start to revenge trade against myself. It wasn't the stock, because I would jump around. It's like, I just go, oh my God, I just lost $2,000 doing something incredibly stupid. I could lose $2,000 in a swing trade, perfectly structured, and it would be like, yeah, that's no big deal. That happens sometimes. And it wouldn't bother me. But if I take a $2,000 loss in a day trade on Netflix, I'm beside myself because I got no business doing it in the first place. And so I would find myself doing whatever it took to make back that $2,000. And by the time I was done, I was down $10,000. So early on, I didn't handle losses very well, and it would only create more losses. As time has gone along, what I have learned is that what I need to do is two things. Number one, I have to walk away. You have to walk away from your loss no matter how big, and I've taken some big ones. And you have to breathe for a while. You have to let that loss settle on you so that your emotions can get back to neutral. Because after you do something insanely stupid, you're not neutral. You're mad at yourself, you're mad at the market, you're mad at your dog, you're mad at everything. And you've got to wait until you find that point of neutrality where you can start trading rationally again. The second thing you have to do while you're going through that process is you have to go back and remember how good you are. I think this is so important. After you take a big loss, you step away, but you have to remind yourself that you're good at what you do when you stay focused. And I have a wife who will do that for me also, which helps tremendously. Either go back and look at performance records or whatever, but you have to remember the times when you were trading flawlessly and executing flawlessly so that you know that this is something you can do. You just deviated, or you just or the market did something you didn't expect. Whatever it is, the point is you have to get to where you know you're a good trader, because confidence is everything. So after big losses, and sometimes it takes me a couple of days, sometimes it takes me, I had one earlier this year that took me 6 weeks of walking away, staying away, processing, figuring out what happened, why it happened, how did it happen, and reminding myself that I'm really good at what I do when I do it the right way. So that's how I do it.
Yeah, I think after a big loss, as long as it wasn't blowing the account completely out, to me, what you do next is very important, because when I have had a big loss, once I removed myself from that loss, like walking away from it, going back and looking at what had happened, you regroup, you heal. And I think too many traders, you go back to the beginning of your career when you said you did revenge trades. To me, those are the ones that end up blowing accounts. It wasn't the trade that was the big loss. It was the trade following the big loss.
Right.
For me, that was always the case. I'd have a bad day. It was a big loss, more than I wanted to lose. Then I come in the next day and then I blow the account. It was almost like I was self-imploding. I just was what a lot of we used to call us in the pit. It would be, this guy's in his own fast market. In your mind, everything's running through your mind, and it's like you don't want to be there, so you're just going to lose everything. So you force yourself to take time off. As we grow older and we get better at managing that, we remove ourselves, we heal quicker, and we realize it's not the end of the world, and you go back to the fundamentals of your process.
Exactly.
What I want to talk about next, people always talk about discipline, be disciplined on Twitter. I think it's abused way too much. I don't think many people even know what it means. It took me years to figure this out. I've talked about this on Twitter. I've talked about this in the show. I think you have to have a disciplined process in your entire life. You can't just say I'm going to be disciplined to the strategy, because you're just going to blow the account at some point anyway. Because if you're not disciplined outside of your life, and there's just so many things you have to be disciplined to, that it's not just about, X's and O's. And you and I think agree on that, right?
Yes.
Okay. So what you and I do and is we do things outside of trading. We both golf. And I know that when I'm standing over putts, when I'm tired throughout a round, how I handle myself in a moment when I'm playing with other people that I don't know and I'm pissed off. Am I staying composed? These are things that I use to test myself and that have helped me in trading. So, Tom, I know that you golf and you do a lot of activities outside of trading.
I do.
What have they done to help you as a trader?
they help me keep balance. Trading, let's be honest, trading can be, for those of us that get into trading, the types of brains that get and personalities that get drawn to it are competitive personalities or intense personalities. So it's real easy to get out of balance as a trader because your measuring stick at the end of the day is money. And so I've always worked very hard at trying to keep trading in its proper place in life. Having kids has helped with that. Playing golf has helped with that. I've got 3 boys that all play high-level hockey, and I coached and still do. And so you work really hard at creating a life around your trading that allows you to keep it in its proper place. When trading becomes too important to me, I don't do nearly as well. As my kids started leaving the nest, I found trading to become more and more difficult because I had more and more time to focus on it. I know that sounds weird, but the busier I was outside of trading and the more distractions I had, the better I tended to trade because I only had a limited amount of time to focus and I kept my scope small and I kept my performance in its proper place with respect to my own sense of self, if that makes sense.
No, it absolutely does to me because as I've grown and each year that goes by, I realize that I've gotten better with my time.
Yes.
When I'm trading really well, it is the times that I am mentally in a really good place aside from anything else. My decision making is crisp. I know when to walk away from a bad trade that could be a potential bad trade. Everything is clicking for me. And that all happens because of what I'm doing outside of trading. When I see people say, open the markets or I spend, I'm at the charts 20 hours a day. I'm like, how could you be effective then? Because you're burnt. You're burnt. You become blind to everything else that's going on. And you're so, like you said, you're just burnt. So I think that's a very important lesson. And it's something that you really don't learn because you and I could guarantee that we have spent, how many hours on the charts? Thousands. I don't even know. Thousands. And now I have refined it to where I can look at it, get a really good sense of what's going on. Where am I in a mental state of mind? And I know how I'm going to go in and trade. And it's amazing how the loss it bounces right off me when I'm in that state of mind versus when I'm pissed off because of something else and I go in and lose, I end up losing more money and I get away from everything. It all starts with the right with the right mindset.
And right mindset is so important. We don't have time today to go into all that, but I've got some hilarious stories of every Sunday night we used to go to my parents for dinner and my brother would come and whatever. And literally Monday morning, it would be so much better for me to have sat down with my checkbook and written a check to my favorite charity and sent it off than to have sat down and traded because it was an automatic. By noon on Monday, I was going to be down a nice chunk of change because I was so irritated from something my dad said or something my brother said or whatever at our little family dinners. So I had to stop going to family dinners just to make a living for my family because because I could not get myself in the right frame of mind to trade on Monday morning after having a meal. And I love those guys. I love my brother and my father dearly, but there was a time in my life when they were just irritating me to no end with various things, and I couldn't trade the next day, ever.
Well, let's talk about something else that could be pretty irritating for a lot of us, and that's Twitter. You and I are both very active on Twitter. I love it. It's by far my favorite social media outlet. But there's a lot. I haven't
decided whether I like it yet or I don't, but I stay active in it.
I think there's a lot of good. So I don't want to be too negative on it, but there's also there's also a lot of bad that goes with it. What do you see as the good and bad of Twitter?
I think there's a lot of good information out there. And I think there are a lot of well-meaning people who are trying to pay it forward, who are putting out thoughtful, for lack of a better word, thoughtful ideas and checklists and whatnot that can point people in the right direction. How's that? That's
I mean, yeah, there's no doubt. We both agree. So what is the bad?
Oh, how long do you have? The bad is that people aren't doing a good job of communicating how damn hard this is. And they're not doing a good job of communicating why it's so hard. And the reason it's so hard is because we as human beings are fallible and dysfunctional and emotional, and we bring so much from outside the trading world into the trading world from our own lives that make everything intimate and personal on a daily basis. And it's really hard to capture that in 140 or now 280 characters. And since everything is somewhat anonymous, it's real easy to, first of all, you don't know how much is true out there. Secondly, it's real easy to present a picture that is attractive to somebody else. And I don't know about you, Anthony, but when I was in my first few years of trading, man, I'd listen to anybody that sounded like they knew what they were talking about. Because you're just trying to grab onto something that makes sense. And there's so many guys out there that like they can't help themselves. Even guys that are given good information find a way to leave out the other side of that information to make themselves look, I don't know if it's fair to say make themselves look better than they really are, or to attract attention or to get feedback. You know, if people are running services, are they really going to tell you that this thing is super hard and the odds of you being successful is almost zero unless you're able to figure out who you are on the inside and manage yourself around that? Because, you know, I could teach somebody how to trade a breakout in an hour, but I can't teach them how to manage themselves to stay in a trade or to not stay in a trade when they have a dysfunctional relationship with money and all of that stuff that everybody to be successful has to work through. And so there's just, it's not necessarily as much disinformation on Twitter as it is not giving the right kind of information that allows people to understand the depth of difficulty they're chasing after when they're trying to do this for a living. I'm a big believer that 90% of your long-term success has to do with your ability to manage yourself. And so, you know, the 5 bullet points to be successful as a trader are absolutely worthless when it comes to that stuff. You know, the guys that are talking about, you know, they made $100,000 in a day and whatnot. It's like, okay, who does that help though? Who is that helping? It doesn't help anybody. All the success stories of the charts that get posted. See, I told you back, 14 days ago, I posted this chart and look, it's kicking ass now. Okay, great. Good for you. Who is that helping other than it makes people that are desperate to learn how to trade want to follow you because obviously you know how to pick winners better than the next guy. So when I'm engaging with Twitter, when I see you engaging with Twitter, and I know there are a handful of other guys that do the same thing, we're trying to share to the best of our ability the painful side of trading and the shit you have to wrestle with to make everything make sense. It's doable. It's just the skill sets that are required are so different than what people lead you to think that they are, in my opinion.
Yeah, I mean, trading is a journey of oneself.
Yeah.
And when I think I see people put out how much they're making or certain lifestyle remarks out there. I just think to the person who's new and how they are only coming into this thinking about making money versus coming in and actually learning the business, protecting capital, and having a career in it, as opposed to just this revolving door of people coming in thinking it's all about making money and this lifestyle, and 6 months later they're gone. Like you talked about, you put the $5,000 in your account and three weeks later it was gone. I put $25,000 in my first account and 6 months later it was gone, and you're just going, okay, now what? And my mindset, I could tell you this right now, was I was coming into it to make money for the lifestyle. I didn't think about anything else. So, and then you learn real quick when that money is sucked right out of your account. I go, whoa, I better take a different approach to this. So
you got to reevaluate, and it becomes an exploration. I mean, you said it. It's an exploration of you. You have to want to do that. You have to want to let the market lift up all those ugly rocks and open all the doors of the dungeons inside your soul that you maybe don't want to actually look at. But if you're going to be successful long term, you got to let the market peel that stuff away so that you can be honest with yourself. The payoff is huge outside of trading. It's not a fun process to go through. But if you can accept that that's really what you're doing when you're trading, then the victories other than monetary feel just as good.
Well said, Tom. Great stuff. We've got some rapid fire questions now if you're ready for those.
Okay.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Tom, first question. What trader has influenced your life the most and why?
I've already mentioned him, Pat Walker. He humbly took the time and had the energy to show me his method of trading, which is the same method that I use today. And so I'm thankful and very appreciative of the time that he took, and it's made all the difference for me.
What was one of the hardest things that you've had to overcome in trading?
Handling big losses and handling big successes, both. The losses we've already spoke about. The successes, learning how to manage success is also difficult because you have to keep yourself in check. And it's real easy to have really big losses after really big gains because you start to think you're a bit invincible. And so I still struggle with it. And so that's kind of the next frontier for me, is figuring out how to be comfortable in success on a continuous basis.
How has your trading process evolved over the years?
It's gotten a lot more efficient. It has evolved. You tweak and you tweak and you tweak, and it's gotten down to where, I only have so much time that I want to put towards doing what I do. And so it's changed in that I've become much more efficient with my time in terms of managing my strategy.
What is one attribute you believe every trader should have?
One, you got to be resilient, because shit's going to hit the fan, and you have to be able to pick yourself up day after day after day and keep going. It's not how smart you are, it's how tough you are.
What's your favorite book about trading?
Reminiscence of a Stock Operator. Great story.
What's your favorite movie about trading?
Wall Street.
What's the best piece of advice that you've received about trading?
Believe in what you see and not in what you believe, which basically means let price dictate your actions and not your opinion or what you might think is actually going on. Let price be the arbiter of all decisions.
If you could give a piece of advice to the younger you, what would it be?
Slow down. Don't set goals, and be way more forgiving of yourself.
Last question for today, Tom. What's your favorite thing to do when you're not trading?
Watch my kids play hockey.
Tom, where can people find you on Twitter? And if you have a website, give us that too, please.
I'm at Canny4 on Twitter. That's about my only, I don't have a website or anything, but that's if anybody wants to get at me, that's where they can find me.
Tom, this was awesome, man. I can't thank you enough. So glad to have you on the show today. It was a blast. Thank you so much for coming on Futures Radio Show.
Thanks, Anthony. It was a lot of fun. Hopefully we can do it again sometime. Good time.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.